Imagine multiplying your investment tenfold in just a couple of years. That's the dream driving crypto investors as we look toward 2026. But what does it really take for a crypto coin to deliver such explosive growth? In this video, we'll break down the key factors that make a 10x possible, spotlight some top contenders, and discuss the risks you need to watch out for. Whether you're a seasoned trader or just getting started, understanding these fundamentals can help you navigate the fast-moving world of crypto and spot opportunities before the crowd. Not every crypto coin is destined for massive gains. To spot a potential 10x, you need to look for a few key ingredients. First, a small market cap or undervalued project means there's more room to grow. Real utility is crucial. Coins that solve real problems like DeFi AI or infrastructure have a better shot. Strong developer activity signals long-term commitment and trust. Good tokenomics like scarcity and incentives to hold can drive price growth. And finally, partnerships and integrations add legitimacy and boost adoption. Let's explore these factors in more detail. One of the biggest advantages for a potential 10x coin is starting from a small market cap. When a project is undervalued or just getting started, it's much easier for it to grow rapidly compared to established giants. Investors often look for hidden gems that haven't yet caught mainstream attention. However, this also means higher risk, as smaller projects can be more volatile and less liquid. Still, if you can identify a promising project early, the rewards can be substantial. Coin's long-term success depends on its real-world utility. Projects that solve genuine problems, like improving decentralized finance, powering AI applications, or building blockchain infrastructure, are more likely to see sustained growth. Investors and users are drawn to coins that offer something valuable beyond just speculation. When a project's technology is actually used and needed, it stands a much better chance of weathering market cycles and achieving significant gain. Strong developer activity is a key sign of a healthy crypto project. When developers are actively building, updating, and improving a platform, it shows commitment and increases trust among investors. Regular updates, open source code, and a vibrant community can all signal that a project is here to stay. This ongoing development not only improves the technology but also attracts more users and partners, setting the stage for long-term success. Economics refers to how a coin's supply and incentives are structured. Coins with built-in scarcity, meaning there's a limited supply, often see stronger price growth as demand rises. Incentives to hold, such as staking rewards or governance rights, encourage investors to keep their coins rather than sell. Well-designed tokenomics can create a positive feedback loop, driving both adoption and price appreciation over time. Partnerships and integrations are powerful growth drivers for crypto projects. When a coin teams up with established companies or gets integrated into popular platforms, it gains legitimacy and often sees a surge in adoption. These collaborations can open doors to new markets, attract institutional investors, and boost user confidence. Always keep an eye on a project's partnerships. They can be a strong signal of future potential. Broader macro environment plays a huge role in crypto's potential for growth. Regulatory clarity, institutional interest, and global economic trends can all influence which coins thrive. For example, favorable regulations can attract big investors, while uncertainty can hold projects back. Staying informed about the bigger picture helps you anticipate shifts in the market and position yourself for the next big move. Arbitrum is a leading Ethereum Layer 2 scaling solution designed to make transactions faster and cheaper. Its ecosystem is growing rapidly, attracting both developers and users. However, it faces stiff competition from other Layer 2 projects. If Arbitrum can maintain its momentum and continue to innovate, it could be a strong candidate for significant growth before 2026. Ender Network combines the power of AI, the metaverse, and GPU rendering. This project aims to provide decentralized rendering solutions for digital creators and virtual worlds. The potential is huge if demand continues to rise and the network can scale effectively. However, it's important to note that success depends on adoption and the ability to handle large-scale operations. Cardano stands out for its sustainable, academically driven approach to blockchain. With smart contract capabilities and a focus on peer-reviewed research, Cardano aims for long-term stability and growth. However, development has been slow, and widespread adoption is still needed to justify a 10x return. If Cardano can accelerate its ecosystem and attract more users, it could be a major contender. Ethereum is the backbone of decentralized finance and NFTs, with strong institutional support and a massive developer community. While its market cap is already huge, making another 10x less likely, Ethereum's role as the foundation for countless projects keeps it relevant. Continued upgrades and adoption could still drive significant growth, even if not at the same explosive pace as smaller coins. New small-cap altcoins, especially those combining AI and blockchain, offer massive upside potential. If one of these projects gains traction, the returns could be life-changing. However, these coins are extremely volatile with a high failure rate and regulatory uncertainty. Only invest what you can afford to lose and always do your own research before jumping in. For chasing 10x gains, it's crucial to understand the risks. Regulatory changes, government crackdowns, and high competition can derail even the most promising projects. Market downturns, technology failures, and low liquidity are also real threats. Always consider the bigger picture and have a risk management strategy in place to protect your investments. 10x return in crypto before 2026 is possible, but only for select projects with strong fundamentals, innovation, and the right timing. High rewards always come with high risks, so it's essential to research deeply, diversify your portfolio, and manage risk carefully. Stay informed, stay patient, and remember that in crypto, the journey is just as important as the destination.